What's up, ladies and gentlemen? This is Gerald and welcome back to another video. So today I want to talk about a very important topic, and that is how much money should I invest into cryptos? How much money should I invest into stocks? Should I all in into cryptos? So why did I get this idea was because I was catching up with a couple of friends, during this past few weeks. And it came upon me like more and more of my friends are starting to ask, hey Gerald, teach me about mining. Hey Gerald, should I buy SafeMoon? One of my friends, he bought SafeMoon at like $500. Now it's like $25,000. And they're like, should I buy SafeMoon? You know, right, Gerald, because you're the personal finance YouTuber. And they also started to ask me, GameStop fell from like $400 to like $150. Should I buy GameStop? Should I buy Tesla? Is it a good buy right now? And I'm like, what? What do you know about these stocks, cryptocurrencies? And they're like, not much, I'm new. So I'm like, and that made me wonder, like, why are people starting to buy random things that they have absolutely no understanding about? And that's not what this channel is about, right? So here's the thing. So let me start with this interesting story. So there's this old tale that there was a time where a particular part in California, they ran out of sardines because people were fishing them up to make sardine cans like crazy because it was so popular. They call it the sardine trading frenzy, right? So people started to trade up the value of sardine like crazy. So one can of sardine, which traditionally cost like $1, was costing like $100 or maybe even $400 or $500. So one fine day, there was this hardworking person. He decided he got a pay raise or bonus at the end of the year. So he decided, let me reward myself. So he spent his entire month's salary to buy a premium can of sardine for like, $500 in the olden days, right? It was worth a lot. So he tried to taste the sardine. He was like, what? It's bad. So basically what happened was that the sardine has gone bad, and then he went to complain to the person that sold him the sardine. Hey, this sardine is expired for like 2 years old. So why is it sold to me? And then the merchant was like, what? You don't understand. These sardines are not meant for eating. These are for trading. And boom, mind blown. So that's what's happening in a lot of the meme stocks right now. By the way, this is not my story. This story was from Seth Klarman. He wrote the book called Margin of Safety. And the story is very interesting because it tells you that a lot of people are buying things without actually knowing what the underlying thing that they're buying is. And that is exactly what's happening right now. A lot of people are buying lots of different stuff. And why did they buy it? Because it's memeish, it's fun, and there is safety in consensus. When all your friends start to buy the same thing as you, you're like, yeah, this thing is safe, right? All my friends are buying it. But it's really a case of monkey see, monkey do. And if the first person that started this amongst your group is oblivious to what they're buying, then basically the whole group is moving blindly into investing, and that is very, very dangerous. And if you're like brand new to investing and your friend recently tell you or try to convince you to buy a certain stock or crypto together, and you're like, I'm one of those guys that Gerald just mentioned, what do you do? Well, if you are not willing to spend a lot of time, to get your hands dirty to research, and you're very new to investing, what I suggest is to stick to what is tried and tested and basically gives satisfactory returns, right? And that is to dollar cost average and buy like the US market index, like your SPY ticker symbol, like over here, or VOO over here, which is basically the same thing. Basically what you do is you buy every single one of the US company or the top 500 of them, and you get the average market return, which is really good, like 7 to 10% compounded on a very long period of time. As a general rule of thumb, how conservative you want to be in investing is really a proponent of how much effort you want to put into research and understanding, investing, the things that you're actually buying. If you're not willing to do homework, that's where you can lose a lot of money very quickly. So take this as a fair warning for those of you that want to or is considering to put all your money into cryptocurrency so you can get like 1000% APYs. Never bet all your money or all your eggs into one basket, especially if you're not willing to do the homework to research what you're buying. So now let's talk briefly on why I like stocks and why I like cryptos and the reason for investing in either one, right? So in my case, I like stocks better, slightly more than cryptos, but I'm also still exploring and learning about the new cryptocurrency space and the profit potential of it. So while I like stocks better, I'm also still exploring and learning about the profit potential of cryptocurrency. So here are my reasons why I'm considering stocks and I prefer stocks, and why I'm also considering like cryptocurrency. So the thing that I love about stocks is that it has a long history and track record of surviving past market crashes, and it's been proven to yield approximately 7 to 10% compounded over the long term. To be fair, I think the stock market started like as early as like the 1700s, so it has like a good 300 years to prove itself. Whereas cryptocurrency, well, it hasn't even gone mainstream yet, so that's how far behind cryptocurrencies is. So I feel a lot safer when it comes to investing in stocks. And secondly, when it comes to investing in stocks, right, I know that the only way I do badly is that I buy really poorly valued stocks, because I know that the average yields like 7 to 10% compounded, which is way better than what our savings interest rate is yielding right now. So the only way I do badly, like to lose money, is that I buy super overpriced stocks which just crash and burn, or I trade too much. I sell low and buy high, and I pay the brokers like so much money that they become rich and not me. So if I kind of buy a relatively diversified portfolio of stocks and hold it for the long term, even if I perform average, right, that's still a good 7 to 10%. Not to mention a lot of stocks and REITs, so stocks and REITs pay dividends on a regular basis, and that basically gives me cash, and cash in pocket is much safer than cash invested in the stock market, right? So that's risk off the table. On the other hand, cryptos are also very interesting because it is essentially a new form of disruptive technology like digital money, and basically it is something that the government has no control over the inflation of it, unlike our fiat currency. And also we are able to take on the roles and earn the profits from like your big bad banks, or maybe your neighborhood money changer. Well, someone's going to make money, man, and it's not him, it's going to be you. And most importantly, the profit potential is insanely high, especially with yield farming, lending protocols. So basically lend your cryptos or provide liquidity or money changing for your currencies. You earn a lot of money off of it. But I must warn that cryptocurrencies in general is still very new and disruptive, so they are still susceptible to hacks. Like recently, one protocol just got hacked $50 million, and that's like insane. One day, poof, gone. And that could be your money. Of course, you can argue that if you choose like the more established, bigger coins like your Bitcoin, your Ethereum, they are a lot safer from hacks, but not immune. Even Ethereum had like a scare a couple months back. They're not immune, but the point is that they are much safer, but still really risky, because how do you even determine what's the value of one Ethereum? How much is one Ethereum worth? Does it even produce cash flow? Like stocks and properties, your REITs, they pay you cash flow in dollars on a regular basis, right? But cryptos, what does it pay you in? More cryptos. But what's the value of those cryptos? It's hard to determine, right? So it's kind of like, it's almost arguable that it's a greater fool's game, but who knows? So let's talk about what I have invested personally. So personally, I put around 70% of my money in the stock market, mixed between stocks and option, because I feel that it's a lot safer. And in cryptos right now, I have about 30% in it. And in my opinion, I feel a little uneasy holding 30% of my money in cryptos, despite the fact that, hey, it could potentially make me a ton of money. And the reason why I have 30% in my portfolio, because I actually put in about 10% of my portfolio, but that 10% grew so quickly that it became 30% of my portfolio. So what am I thinking? I'm trying to like put money, my initial capital, that my initial 10%, I want to cash that out. Why? Because money in my pocket feels a lot safer than money being risked in such unpredictable asset environment. But at the same time, I still get to appreciate all the yield. And if I lose money, hey, I didn't lose my initial capital. So that makes me feel safe psychologically. If you're brand new to investing, I would suggest not to put money in cryptocurrencies that you cannot afford to lose. So for me, I'm comfortable with 10%. For you, it could be as low as 1%. That's okay. Even if you skipped out on cryptocurrency, that's also okay. There is no harm in, diving blindly into something that you think will make money and you have absolutely no idea what it does. Again, I reiterate, what matters most is how much effort you're willing to put into research. At the end of the day, what matters most is that you don't go all in full-heartedly, and that you actually spend time researching on what you're actually buying. Like, for example, cryptocurrencies, for the smaller projects, you want to research onto the teams. Who are the ones that's supporting the project? Do they have funding? Are the founders of the project reliable? Do they have solid portfolio, or are they anonymous and they keep everything in secrecy, or they just say they all out give up on the project? That's scary. So all in all, I understand that I didn't give a very clear answer, and I'm so sorry that I don't give a clear answer, because this really depends on your own personal situation. And again, I don't want to be a party pooper, especially when cryptocurrencies are like so hot right now. But there's a lot we can learn from the past financial crisis about cryptocurrencies. Like for example, the dot-com bubble boom. You can see how cryptocurrencies is disruptive, like how the dot-com companies were back in those days. Similarities. And there's also the Asian financial crisis, back in the days, the Thailand currency just popped. Cryptocurrencies, financial crises, currencies. You get the idea. A lot can be learned from history. I think what really hurts is when you spend a couple of years saving your money so hard only to have it gone like the wind. So I don't want that to ever happen to you or your friends for that matter. So I'm going to leave a link down in the description about, that summarizes all the different financial crises. It gives you a good overview of the lessons learned, so do check them out. And as always, it's okay to sit by the sidelines if you're unsure about the investment opportunity. That's why it's called investing and not gambling. And most importantly, if you intend to seriously grow your wealth, well, consider subscribing to my channel, and I will take you along the journey to share with you what are my thoughts, my insights. And just to be clear, I intend to post a little bit more about my stock positions and options and my thoughts. But right now, because I'm exploring a lot about crypto, so I post a lot of how-to videos about cryptocurrencies, so just bear that in mind. So with that in mind, take care, have a great week, and I hope to see you in the next video. Take care, everyone.